The cryptocurrency market is on high alert following a recent analysis by CryptoQuant, suggesting the sector may be entering a speculative bubble even more pronounced than the one seen in the 2021 cycle. The warning came from Ki-Young Ryu, CEO of the renowned on-chain data platform, who published a detailed study highlighting signs of irrational exuberance surprisingly centered on the behavior of Zcash ZEC, a privacy-focused cryptocurrency historically less volatile than major assets in the ecosystem. According to the analysis, ZEC's current trading volumes already exceed the peaks observed during the 2021 bull market, when the token reached approximately $300 before collapsing. What concerns experts is not only the magnitude of the rally. ZEC has surged over 750% in the past 3 months, but the distribution pattern accompanying it. This is a classic phase of financial bubbles, where large holders' whales take profits while retail investors, lured by euphoria, enter the market at peak prices, becoming buyers at the top. CryptoQuant's study uses an innovative chart called the Spot Volume Bubble Map, which tracks Zca's trading volume behavior since 2020. In this visual model, each circle represents the volume magnitude for a given period. While colors indicate the rate of change, cool tones signal stability or cooling, and warm tones indicate overheating. Currently, the chart displays in large circles and intensely red hues, revealing accelerated capital rotation and extreme volatility, a pattern nearly identical to the one observed just before the 2021 correction. This distribution phase is particularly dangerous because it masks underlying fragility beneath an appearance of strength. Prices rise rapidly, fueled by speculation and leverage, while the real support base, comprised of long-term investors and organic adoption, remains unchanged or even weakens. In this scenario, any external shock, such as a shift in monetary policy, regulation, or even a simple institutional sell-off, can trigger a rush for the exits, leading to declines exceeding 80%, as happened with most assets in 2022. Despite CryptoQuant's cautious tone, not all market participants share this conservative view. On October 26th, Arthur Hayes, former CEO of BitMEX and an influential figure in crypto, claimed ZEC could reach $10,000 per Tokona projection, so optimistic it reinforces the climate of excessive hope that typically precedes major corrections. Since then, ZEC has oscillated between $308 and $328, maintaining high volatility but without confirming any breakout move. However, the risk extends beyond Zcash. CryptoQuant warns that if the current speculative dynamics persist, there is a high likelihood of contagion to other smaller assets, especially those with low liquidity and high susceptibility to market manipulation. Privacy coins, niche tokens, and projects built on inflated narratives could become the next targets of pump-and-dump cycles, replicating the 2021 scenario in which dozens of crypto assets rose hundreds or even thousands of percent in weeks, only to collapse months later. Ki-Young Ryu emphasizes that all 3 classic pillars of market bubbles are currently present: abnormally high volume, detached from real fundamentals; excessive optimism, fueled by unrealistic price targets, and faux fear of missing out; massive inflows of retail investors, many of them inexperienced, leveraged, and poorly informed. Historically, this combination marks the end of a bull cycle and the beginning of a prolonged correction phase. The difference in 2025 is that the crypto market now operates in a more institutionalized environment, with regulated ETFs, professional custody solutions, and deeper integration into traditional finance. Yet, this maturity does not eliminate speculative behavior, merely redirects it toward newer assets, like ZEC, which temporarily fly under the regulatory radar. Given this context, CryptoQuant's implicit recommendation is clear: extreme caution. While the global macroeconomic backdrop featuring still elated, U.S. interest rates and emerging stimulus in China creates an ambiguous landscape. Assets with little practical utility and high reliance on narrative become extremely vulnerable. Zcash, despite its robust privacy technology, lacks large-scale adoption and established commercial use cases, making it more prone to purely speculative movements. In summary, CryptoQuant's warning is not a call for panic, but a necessary reminder of the natural cycles of financial markets. History does not repeat itself identically, but it always rhymes. And in 2021, that rhyme ended with a free fall. If investors ignore today's signals, runaway volume, unchecked euphoria, and hidden distribution, they risk repeating the same mistakes, potentially with even greater losses in an ecosystem that is now more interconnected and leveraged. Time will tell whether Zed becomes the catalyst for a sector-wide correction or merely an isolated episode of speculation. But as experience teaches, when on-chain data points to a bubble, the best trade isn't to bites to observe, protect capital, and wait for the dust to settle.